Well students, if you recollect what we were discussing in our earlier session, after the event has happened, after the risk has happened, what are the various ways, and those four famous T's we are discussing about, that is either you tolerate it or treat it or transfer it. If all the three do not work, terminate it. But then is it possible to prevent it? So, in this session we will try to learn something on how to prevent it. There are preventive measures and corrective measures, curative and corrective controls. What are those preventive and curative controls? It is known as preventive, corrective, directive and detective. Preventive controls are designed to limit the possibility of undesirable hazard event occurring. That is, I will ensure that it will not happen at all. That means you have taken all the preventive measures so that that particular hazard, peril, risk, connected event does not occur at all. Corrective controls are designed to correct undesirable circumstances and reduce unacceptable risk exposure. So, now preventive means to prevent it altogether, corrective means yes, it has happened, but still I am capable of correcting so that I can reduce the exposure. Exposure means risk exposure, how much money is at risk. The majority of control implemented by organizations are preventive control. Managed efficient organization, they do not wait to that hazard or risk to happen. Before it happens, they will take all the preventive measures, what are the probability, so that that particular risk does not happen. For example, look at this para number 2. For health and safety risk, preventive controls will include substituting a less hazardous material in the process. Let us say there is a manufacturing process, you are using some chemical which is hazardous, which is affecting the people who are working in the, let us say, factory. So, instead of using a particular chemical which is more hazardous, I can go for a less hazardous material. That is prevention. After happening the risk, and after let us say the employees got injured or suffered or health wise affected, then you may go for those 4 T's. No, instead can you reduce right now the particular chemical which is causing some concern. Of course, now in the preventive control what you have to take into account is what is the cost involved. For everything we do cost benefit analysis. If I spend so much of money, what will be my benefit? But when it comes to hazards, you should not think of cost more. You should think of the safety of your employees, even though it may be little bit costlier. There we cannot see if my cost is 20%, my benefit also should be 20%, particularly when it comes to preventive control. Now supposing you cannot do that, you outsource it or replace the process itself, which will be less effective, but it will be more efficient. Here the cost it should not be a prime concern. Corrective controls are designed to correct undesirable circumstances. I already talked about this. So that it becomes less likely to occur. Less likely, it may occur, but it is less likely. What is the next option? Preventive controls are not technically feasible. Supposing technically it is not possible, operationally can be done, but it can be cost effective. So you have to consider whether it is economically viable, operationally possible, technically feasible, financially undertakable. If the cost is too high, then you outsource it. These are some of the drawbacks in corrective controls, but then once you because you could not undertake that preventive control, it has already happened. Ultimately, you have to correct it, whether the cost is more or otherwise. The concern is health and safety at work, particularly for manufacturing companies. Now, when it comes to, let us say, service industries like in a bank, insurance, you would have seen in the papers, almost every day one or other type of frauds occur, particularly in financial sector. Now, there are certain preventive measures like as you can see here, use of passwords, so that you can reduce that fraud. Stop rotation. I don't know whether it is proper for me to quote this example. There is one case, particularly from India, Nirav Modi's case. There was one particular clerk working there for so many years, and it was referring to letter of credit fraud, and he managed to see that whatever letter of credits were issued, they are not put into core banking system. He was there for quite long time. So the last paragraph, what it talks about, stop rotation and regular change of supervisors. If both of them in collusion, they can work and they can see that they can manipulate. Maybe when I talk on risk in banking, I will tell you some of the cases. The Bearing Bank, 150 years old, which was having trillions of transaction, was brought down overnight, and its share was sold for £1, just £1 sterling. And there was one Nicky Lesson who did all this fraud. So, had you done some corrective controls, had you changed that fellow, perhaps the Bearing Bank would not have gone into liquidation. So, the corrective controls have to be taken. It should be simple, it should be cost effective, and it is not sometimes voluntary, based on what sector you are working. For example, insurance, there is IRDA in India, I am talking about India, and let us say it is banking sector, there are regulatory authorities. If you are talking about US, Fed Reserve has got a lot of regulatory directions. Similarly, in India, Reserve Bank of India. So, there are central banks, they give some directives, and automatically the corrective controls are implemented. Here is in the last sum up slide, I have given you in a chart, so that there will not be any confusion. As you can read this, it is classified. One is preventive, another one is corrective. Corrective is also sometimes it is referred as curative, because you are going to cure that. Now, in preventive means elimination or removal of the source itself, so that that risk does not happen, or if you cannot remove, substitute it with the lesser hazard. I was mentioning about a chemical. So, then hierarchy, that means the authority, frontline officer, mid-level officer, senior officer, top officer. So, you can give some limits to at each level, so that even if something goes wrong, the amount involved will be less. Then corrective means reduction by job rotation, as I told you, or limitation of hours of work, and particularly when it comes to financial transaction, giving passwords and stop rotation, regular change of supervisors also. There were instances where when even the mid-level managers were involved in some of the financial frauds. So, I hope if you read this table, it will be more clear. I have given sufficient examples. I believe that you have understood, apart from those 4 T's, how this can be altogether preventive, or how it can be, corrective controls can be implemented successfully. Okay, we will meet again.